Welcome to This Week in Money. I'm Jim Goddard. Today, Ross Clark from chartsandmarkets.com runs down the major markets where conditions could be described as bouncy. Ross takes a look at the big drop in Bitcoin. He also comments on gold, crude, and the U.S. and Canadian dollars. He also has a special offer for our listeners. Editor of Rick's Picks, Rick Ackerman, joins us from Florida. He believes Bitcoin has a lot of room to fall further and has an important low for the cryptocurrency. Rick tells us why he's no big believer in AI and tells us about the risks AI investors face. Publisher of the Campbell Real Estate Timing Letter, Robert Campbell, checks in from San Diego to discuss U.S. real estate and which city has a surprisingly healthy real estate market. He also has an important health tip for you. Leader of the OneBC party, Dallas Brodie, is here to discuss concerns about private property rights in British Columbia following a controversial court decision about Aboriginal title. We'll talk to Ross Clark right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com. Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Ross Clark from chartsandmarkets.com, where you'll find insightful market commentary and timely technical analysis. You can find him on X at Charts by Ross. Welcome back to This Week in Money.
Always a pleasure, Jim.
Ross, you have a special treat for U.S. Thanksgiving?
Yeah, U.S. Thanksgiving right through Black Friday here. It's 25% off for new subscribers. So take a wander over to the website, chartsandmarkets.com, and select the item on the front page there, and we'll give you a chance to come on board.
Ross, how would you describe what happened on the stock markets this week?
Well, we got a pretty big washout, and then early in the week, a reprieve for an hour or so after the NVIDIA earnings came out, but then that one took it on the nose, and here we are on Friday bouncing back again. So, this whole process of the advanced decline line starting to show divergences here in the last month or two. And then we had 6 Hindenburg omens. Those are ones that measure the discrepancy between the new highs and new lows. And when you get, 6 of those since the end of October, that's just through the roof in terms of the number of signals. So it's typical of market highs as you're going through this then rotation. And, as we've seen what's going on with anything related to AI, there's definitely overvaluations that are giving back quite a bit right now. So, this in our signals on the credit side, when we look at the CCC spread, so those are the low yield bonds, and we look at the interest rates that those are getting, that rate has been going up, and in particular, we got a breakout right around the 4th of November on that index, which is we've seen 7 or 8 times in the last 2.5 decades, and all but 2 of those significant corrections in the market, and it is pretty good from a timing perspective. So that kicked in 2 weeks ago, and here we're having real vulnerability into yesterday. So this first move, if we look at it on the S&P, is an index. It got down to its 20-week moving average. That's happened pretty quickly here, but we would expect that you would go into a bit of a thrashing phase back and forth. And, this is very, very reminiscent of Q2 of 2000. We had the bid.com rally into right through the late 1990s into January through March of 2000. And there was discrepancies happening in there. We got similar signals on the indicators that we look at into March of 2000. The break in April of 2000, very, very much like the reversal that we've seen here in this last 48 hours. But we would expect that a period of consolidation now, maybe lasting a couple of months, as this broadening top prevents trading opportunities, but I don't think anything major on the upside. We do have the seasonality kicking in right around Thanksgiving. So the period that we're entering into now is probably one of consolidation. You'll look for more and more rotation. Things like the Dow utilities probably going to hold up reasonably well. Anything that's got a good dividend on it. All during this period as the IA or the AI stocks give up some ground and go through their deeper correction.
Bitcoin seems to be melting down. What's the story there?
We've come from 125,000 down to 83,000. We got signals at the beginning of the week, last week, that showed that we were coming close to an interim low. And as of the end of the week, our capitulation model has gone into an extreme reading on the downside. That is typical of what you see prior to a good retracement rally. So here we are. We bottomed out at 83,000. We're just over 84 as we go into the latter part of Friday. And this thing could have a pretty decent bounce. 95,000 might be in the cards right now, but that's about all. Not the beginning of a major move. We've seen cleanouts on Bitcoin like this in the past, so you got to give this thing time to find a bottom. But for now, the easiest path is going to be a retracement rally and then back down again.
What's going on with gold?
Gold, we had so we've got that April high, we got the first correction, now we got the 60% retracement rally, and from there we expected that we would go back down, and we've been looking at the 34-day moving average, which historically, after a spike high, is a good support level. That's what we hit on the initial break. Now we've had the retracement rally, as I said, Fibonacci retracement, and we're right back down this week retesting that 34-day moving average. And what you'd expect to see here is a consolidation phase that, could last a while. We've got seasonality that kicks in on the positive side as we get into December, and then from December into January, February, has got typically an upside bias to it. So, we'll look to see if it's capable of getting back above that 60% retracement level. But for now, I think you're looking at a consolidation area. And, if you can pick it up around the lows for, a short-term bounce, that's probably a reasonable trade. The other precious metal, silver, really had a big retracement rally and has now, as of this week, got back down below its initial break. The best that I've got in terms of analysis there continues to be an erosion that would take us down into the low 40s. And from there, then that's the point at which we could get a pretty good move. The long-term cycles have been pointing to the second quarter of next year for a high, and we'll see if it's able to just get back and retest that $54 to $55 level, or whether it's got the steam to punch through. We've got some upper channel lines way up there at 75 and 125, but it's going to take a real catalyst to get things going on the upside.
What's going on with crude?
Crude oil, as we've been hoping, it's been a slow erosion process here. Now that we're back down to new lows for the last couple of weeks, looking for that December-January period for an interim low, and clearly this one is just building momentum slowly on the downside. I think we've got a reasonable chance to see no lows on the year, before the year end.
What's going on with the U.S. and Canadian dollars?
Great base here on the dollar index. We've got the double bottom. I think everybody in the world can see that one. And we've now not only come around and tested the highs that we saw within that base, we've had the crossing of the moving averages we look at, the 20 and 50-day moving averages crossed to the positive side. Then we had a pullback on the 13th of November that tested the break, the short-term uptrend. We got an oversold reading, and we're right back now to par 25. It looks as though this thing has got potential to move up into the range of 103 to 104. That just measures the height of the base and looking at the potential that's in there. So once it gains some steam, I think it gets a chance to really rock and roll from here. The other side of the coin would be the Canadian dollar. And guess what? As we're seeing the movement up in the U.S. dollar, we're seeing the Canadian dollar giving up ground. And, we're, 70, 90 right now. And with declining crude oil prices and declining CRB index, the best potential now is for a continuation on the downside until we see some divergences where the dollar starts to hold relative to those other items. But for now, they're moving in tandem on the downside. So easiest play is long U.S. dollars, short Canadian dollars.
Ross, can you tell us again about your special offer?
Right, 25% off through the Thanksgiving weekend, chartsandmarkets.com, and we welcome you aboard.
Ross, thank you so much for being on This Week in Money.
Good to be with you, Jim.
My guest has been Ross Clark from chartsandmarkets.com. You can find him on X at ChartsByRoss. Coming up, Rick Ackerman, next on This Week in Money.
Always consult your investment professional before making any investment decision. This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. My guest is Rick Ackerman, editor of the newsletter Rick's Picks, his website, rickackerman.com. Where are you speaking to us from today?
I'm in Florida, and it's a nice sunny day. The weather's cooled down a little bit so that it's almost tolerable.
Rick, we're going to kick off the show talking about Bitcoin, something that you don't really believe in, but so many other people have put billions of dollars into, and we're seeing it drop dramatically. How high did it go, and how low can it go?
Well, it went as high as $126,000 per, and the worst it can do is go to zero. From a purely technical standpoint, in order for it to get to zero, we need for this first leg down to come back down into the low 50s. Any rally from anywhere below 74,000 is going to be a corrective rally, meaning we're already going to be in a bear market. So, and I know from the collapse of 2008, 7 and 8, 8 and 9, that when I get negative numbers, when I'm projecting targets using my hidden pivot system, the negative numbers mean bye-bye. I did get negative numbers, negative downside targets for Lehman and Bear Stearns, and I didn't know what that meant at the time, but I know now.
Well, now, is there what's the pressure on Bitcoin right now? Is it the stock markets, people selling off Bitcoin to cover tax losses, or is there just a loss of confidence?
We have just a few really big players. You know, at the top of the heap is probably the Winklevoss brothers, who have God knows what, since they put everything, they parlayed everything they took out of their Facebook deal, their settlement with Zuckerberg, and so they're not sellers yet, and Saylor is sort of at the lower end of the big timers, so they're just kind of hanging tough. But the problem is there are, I think it's 17,151 boutique flavors of cryptocurrency, and you're going to find that all but 2 or 3 of them are going to be completely illiquid at some point, and that's going to impact. That'll sort of feed back into the Bitcoin market itself. So, the 17,151 boutique cryptocurrencies aren't going to be able to convert into anything. We had that experience already in the 2022 collapse, which took Bitcoin from, I think it was around 70K into the mid-teens. And so Bitcoin is definitely suffering from a lack of confidence, and even though the big guys will simply sit tight and hope they can get their little carnival game going at some point, for me it's all technical. And if Bitcoin goes below 74K, it's Katie bar the door time.
Now, on the greater whole of the markets, the stock markets themselves, everybody's been throwing every penny they can find. Not that they make pennies anymore, but every cent they can into AI. How many people are going to get a return out of that?
Well, I could never see where anybody was going to get a return even remotely equal to what the numbers they're tossing around. You know, I think Sam Altman was up there with nearly $1 trillion with his, at this point, pie in the sky numbers. Musk has really sunk, or was in the process of sinking, that kind of money into his digital ant farm there in Tennessee. And also he's building big time in Austin. He's actually talking about building his own fab plants to make chips that the major suppliers in the world, maybe Taiwan, mainly Taiwan, will not be able to furnish for the combination of his car and robot business. So these guys are in for big sums. And there was an interesting analysis out by a guy named Pereira, who was talking about, I think it was a $610 billion bubble in AI. He calls it a Ponzi scheme, which is arguable. But he said it was imploding, but the numbers are hugely larger than that. Even Bitcoin supposedly is a $4 trillion market. So these are large sums, but they're mostly grown out of our minds so that they will shrink very quickly. And in the case of the stock market, the shrinkage will be greatly affected by the gaps that were made going up. And I've written about this a dozen times in Rick's Picks about how when earnings are due out and these stocks take a huge leap, the gaps create what you call wealth effect money on the order of $300-400 billion or even more. These are, in the case of NVIDIA, you've got a $5 trillion company there. So when it gaps up 15 points, 20 points, that's a pretty big deal in terms of wealth effect. But that gap, its main feature is that there was no trading in the gap. There no shares exchanged hands. It's just that it closed one day at X price or after before the close. And then when the earnings came out, there was this big gap. So those gaps are going to be driving the market coming down as well. Just consider them air pockets in a bear market.
Is this going to be like the .com crash in 2000 with so much money invested in AI and nothing coming out of it so far?
Well, we're many orders of magnitude bigger than the .com crash now. This AI story took in such a wide swath of speculative capital and let's say naive investors that it's going to make the .com crash look like an ice cream social.
Now, a lot of retirement funds have been switched over to the stock markets instead of something conservative like bonds. Are retirement funds in danger?
See, yes, they are. And, you can almost sort of read, you can predict what the market will do based on the psychology of all the people who are fully invested. Their 401k plans have fed the bull market all the way up. And at this point, with the market having these days where the Dow is typically down 500, 600, 700 points, or even more at the lows, you can be certain that 100% of their wealth advisors out there are saying, just sit tight. These things, it'll come back. And of course, the buy the dip guys are there doing their bit as well. So what happens is, and this is what you can expect, we'll see a lot of down days where the Dow gets hit pretty hard, and you have enough of those. We don't have enough of them yet, but when you have enough of them, investors are going to be more than just discouraged, and then you'll get some sort of rally that slightly encourages them, but it's not going to go very far, and it's going to reverse into a day when the Dow has lost at least 2,000 points. And over the next, the following week or two, it's going to lose an additional 8,000 to 10,000 points. So the market psychology will take a turn there where investors will say, oh, dear Lord, please just give me one rally and I'll get out of even with some losses. I'll never do it again. But the market, because it's really the reciprocal of the thought process of all these fearful or greedy investors, it knows exactly if you're saying, God, please don't let it happen again. I promise I'll never do it again. Just get me out at point X. Let the market rally to X, and that's where I'll get out. Well, the market has a particular genius for knowing precisely the location of X, and Mr. Market will therefore get you within an inch of X, and just when you think, oh, here's my opportunity, the stocks will fall even harder, and that process will repeat itself until stocks have lost maybe 90% of their peak value.
And we're talking about AI. You feel that AI, notably Sora, has just made Hollywood and the big studios obsolete. What's the story there?
Yeah, it's pretty amazing. I'm like a lot of people. I'm hooked on YouTube. They know my number as long as they give me enough Ali Frazier, some of Ali's fights. And some of these fantastic ballroom dancing competitions. And I love Javier, who does the most amazing moonwalk. And YouTube has everything. And eventually they get your number. And when you start looking at YouTube short videos, you can be hooked for hours, really. So things have just taken a quantum leap, though, with Sora, which enables you to create videos of almost Hollywood quality, just by telling Sora what you'd like to see. And a lot of the videos on YouTube, the popular ones involve matchups between pythons and alligators and panthers and very, very nasty mongoose or mongooses. But now the kids can create these things with Sora. So you'll see a little video. There'll be a guy sitting out on his back porch reading a paper, and a bear sneaks up on the porch, and lo and behold, his little kitty cat chases the bear away. So the kids love these animal matchups, but there's a whole bunch of more adult things like Bruce Lee versus pretty much anybody you can imagine, including Nancy Pelosi. And so the quality of the videos is almost Hollywood. You can kind of see at the edges where it's it's a fake video. But the point is that videos can be faked, even to the extent if the kids don't pay much attention to copyright rules, they can make their own movies now with, I'm not sure they would choose Brando and James Dean, but they'll pick their own characters. They can make movies with the actors' images and their voices and everything like that. And even in the art world, you take a great painting, many great paintings, particularly with the abstract expressionists, the Jackson Pollock, for instance. A kid's imagination may fall short in certain types of representational art. The kid's not going to think something through that would look like a Rembrandt, the Dutch masters, or something like that. But the kids' imaginations will be able to create paintings that will be indistinguishable from much of the art out there that's produced by artists who are perhaps well known and whose works are very expensive. So we've sort of, and you could say, yeah, we've unleashed creativity in that way. There's no way you can monetize that, by the way. And that's a problem with AI in general. AI can do a lot of cool things, but when you get to that end, well, who's going to make money on this? The answer falls way short of these trillions of dollars that Zuckerberg and Musk and Bill Gates and everybody else, Sam Altman, have put out there in outer space as to their ambitions.
So is this a case of, could artificial intelligence destroy some industries and build new ones?
I don't see which industries it's going to build. I mean, I think the best potential, the highest potential for AI is probably within healthcare and medical science. It's going to, I think it can actually work real miracles there. I don't see where that's going to create jobs because the industry that has sprung up, for instance, to treat cancer is so huge. If you go to Houston, for instance, the Texas Medical Center, it's like a Manhattan where all the skyscrapers, these huge buildings are all dedicated to the medieval methods of what some of us refer to as what is it? Slash, poison, and burn, surgery, chemotherapy, and radiation therapy. So if AI simplifies it, I don't see a net gain in jobs there, although the benefits to human health will be quite amazing, I think. But other than that, I don't see a single area really where there's job growth, and we haven't even begun the process of AI doing what it can really do well, which is put white collar workers out of jobs. I'm talking about lawyers, accountants, and all those guys.
What are you seeing ahead for the stock markets?
Not too good. We're in a bear market, and I did say that the opening, we haven't even had the shot across the bow. The shot across the bow will be a day not in the not too distant future, in the immediate future, I would say, where the Dow has lost 2,000 points. So I also think that because of the institutional character of the markets and the way ETFs and certain derivative vehicles have taken over, that the bear market, the plunge to the bottom will occur much, much more quickly than any bear market that we've experienced in the past. So that you might imagine that even if the Dow is on its way down to, let's say, 2,000 or 3,000, most of the selling, getting it down into the like low 20s, let's say, will take place. It'll happen very quickly, and I mean in a matter of weeks, and then the remaining dribble down to wherever the Dow is going to go. I think it'll be below 10,000, though, for sure. That could take years.
Is the Fed in quantitative easing mode, and could a lot of that money find its way into the stock markets?
There is no money. The money is all like a creature of the mind. The money, whatever the Fed does, whatever it puts into the credit system is what you might call unactualized credit. And what it takes to actualize it is a conviction on the part of the masses that everything is going to go up in price. Everything is going to, and that's the upslope. We're not on the upslope anymore. Everybody's thinking downslope. And so that there's no, the expansive character of easing is completely lost. You don't have any expansion of credit if people are not in a borrowing mood. So the Fed is absolutely helpless right now.
The Japanese bond market, something we probably don't ever think about if you're a regular person. Why should we be concerned about the Japanese bond market right now?
See, that's that's going to be the worst part of the bear market, is that everything we've sort of thought, well, okay, I mean, it's a problem, but we're dealing with it. Well, with the market falling in a bear market, the opposite will take hold in people's minds, like we can't deal with any of these problems. So lo and behold, we're having things sort of pop up that have been coming for 20 years, and all of a sudden they're headlines, one of which is that Japan's bond market is collapsing. The yields there are higher than they've been since probably in more than a decade. And of course the story explains, well, you know, Japan is, the investors are starting to question whether the demographic trend in Japan, which is a nation of old people, can continue to service all the debt that they've run up, both individually and as a collective entity. So something we've known about for decades, which is that Japan's working earning population is collapsing. And now, all of a sudden, investors are having trouble with the debt that Japan has run up. Another problem we're going to be hearing more about, I think the villain in this collapse is definitely going to be private equity. You know, those jackasses went after the real estate market in a big way. They gave their buyers blank checks in places like Denver and Las Vegas and Phoenix and everywhere else to buy all the houses they could get their hands on. And they basically bought the top. They didn't care about the price of refurbishing those spec homes so that they could be rented, for one, because the accountant said, look, you got to calculate this, the rental income on a 10-year accrual. So they went in at the top, they spent a fortune, and they are going to be, well, like a lot of rentiers, they're going to be wishing that they're going to be searching hard for good tenants. So if you're a beleaguered tenant who's tired of rent increases, you can look forward to the day when the landlords will be looking for you and hoping that you're making enough money to sign a 1-year lease. So all right, private equity not only went into speculative residential real estate in a big way, but they took pretty much every dollar of life insurance money, and they put it offshore where U.S. regulations don't particularly apply. So a lot of the big money, we're talking about investments made by CalPERS and the big insurance companies. It's sort of moved out of the country, and people who were depending on their life insurance policies for cash value or whatever, or even for a payout on death, they or their widows are going to be disappointed, more than disappointed. So private equity is in this up to its eyeballs, and it's going to be more and more a theme as the bear market unfolds, that they were the ones that sold us out.
Gold had such a tremendous run upwards. Has it stalled out, and is it in danger of collapsing?
Gold's doing great. You know, when they managed to take it down a few bucks overnight with stocks falling, I'd say it looks pretty good at holding its own against a general decline, or more than a decline in stocks, a sell-off. And this is sort of looking a little bit farther out than my headlights illuminate, but we've talked about this before too, that if gold kind of sits at $4,000 or even $5,000 an ounce, it'll be doing just fine relative to all other assets that are falling out of bed. So I don't think gold has to make much headway from where it is right now to do quite well as an investment. And, there's no question that at $4,000, you've got a lot of strong hands willing to defend that, or at least to keep gold relatively buoyant. So I don't see gold collapsing along with everything else, but it's got a lot of cushion in it. And when stocks start to fall seriously, as opposed to just screwing around like they are now, you're going to see gold get even more support.
Does silver have a lot more wiggle room to go higher?
Silver will do fine. It's not an institutional concern right now, though. The buying that you hear tied to the robust behavior of gold is not just institutionally driven. It's driven by sovereign states that have been accumulating gold for years, and they're not exactly going to turn tail and run. But silver is a good go-along vehicle, and I guess at some point, because it's the poor man's precious metal, it has the potential to take off in a speculative way. So, but again, gold is really the focus of flight to safety and of the hoarding that's been done by not just, as I said, institutional players, but sovereign players.
Rick, anything else we should be keeping a close eye on right now?
Well, I think we've covered a lot of ground here today. The energy patch, which accounts for a good deal of the collateral that underlies huge amounts of leverage buying, you're going to see the oil market shrink and essentially implode the leveraging out that's been done on oil assets. So that's, I guess, the flip side for the little guy is that pump prices are going to stay low, assuming we have no significant disruption in supply. And of course, we are living in very interesting times where those disruptions can occur. Anyway, we're living in the most interesting of times, and I think we're in for a couple of difficult years here.
Rick?
I say couple, I mean more than that.
Oh, yeah, those will be really interesting. Then we'll just be used to living in interesting times.
Yeah, and I know this has been pretty scary talk, but I couldn't recommend better than my colleague Charles Hugh Smith's blog, Of Two Minds. There's a guy who's been getting ready for what's coming for a long time, and he not only preaches a certain resourcefulness and self-reliance, but he explains exactly how he's doing it, and a lot of it is just with sweat and getting his hands dirty, and even in his backyard raising vegetables that are high in nutrition and all that stuff. I think he provides a very practical guide for surviving in the worst of times. He's not only concerned with Plan B, but with Plan C, which I think in his reckoning is having to move somewhere where the resources that you need just to get by will be available. But and by that he's certainly not talking about New York City, Chicago, or any of the metropolises where supply of all basic needs is going to be a real problem.
Yeah, I think of the Gulf Islands here along Washington and British Columbia, where they live pretty well on a barter. A lot of people on a barter system. I'll give you a dozen eggs if you can give me a processed chicken in return.
Well, that's interesting. Yeah, I can see that happening in a big way. I worked years ago in San Francisco. I was affiliated with a company called Bay Area Barter Exchange. And he was way ahead of his time, the guy who started it, but I can see barter coming back in a big way. And it remains to be seen whether in really hard times, whether the barter will all take place above the board, such as Bay Area barter, meaning everything you do in barter is a taxable event or potentially one. So, but barter will, I think, be a very popular way to a very practical way of really getting through the worst difficulties.
And of course, with governments pushing for digital currencies and digital ID where they track every transaction, and they want to track it so they can tax it, no doubt, maybe barter is one way to get around it.
Yeah, and we don't want to talk too openly about that being one of the advantages of barter, because this I never really figured out, but Bitcoin's a taxable event too, and I had. Years ago, I had one of the early adopters of Bitcoin, a smart guy, say, Rick, you should start taking subscription payments in Bitcoin. And I had no problem with that, really. I thought, great. And if I'd done it, I'd probably have, 10 or 20 Bitcoin just sitting around that I held on to. But my thinking really took me in, I think it was a logical direction. I thought, well, if I sell a subscription for $400 and a guy gives me a Bitcoin or 3/4 of a Bitcoin or whatever it was worth then, and I don't immediately convert it into dollars, if the value of Bitcoin goes up, do I have to report it as a capital gain? So the last thing in the world the last headache I needed was to be taking subscription revenue money payments in some form that would subject me to capital gains taxes. So unfortunately, I passed that up, but I'm guessing I would still have the liability, even though when I took the Bitcoin in, it had a value of, let's say, $400. If it's got a value now of, less than it did yesterday, of $80,000, what are the tax consequences? And I guess partly because Trump's our president, we haven't had too much talk about that. It's more the other way, where the tens of thousands of IRS agents that they were going to hire to do some hard auditing, that all sort of went by the wayside. So I don't know. But it's still kind of an unfinished, it's just sort of hanging there, really, about capital gains treatment for Bitcoin, especially for people who took Bitcoin in payment for whatever, or in effect did a barter trade that involved Bitcoin. So we haven't worried too much about that, but as I'm suggesting, pretty much all the things that we didn't care to worry about over the last 10 years are going to become very worrisome.
Rick, thank you so much for being on This Week in Money.
Well, thank you, Jim. It's always a pleasure to connect with your guys.
My guest has been Rick Ackerman, editor of the newsletter Rick's Picks, his website, rickackerman.com. He was speaking to us from Florida. Coming up, Robert Campbell, next on This Week in Money.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com. This Week in Money is archived online at TalkDigitalNetwork.com.
Welcome back. My guest is Robert Campbell, publisher of the Campbell Real Estate Timing Letter, his website, realestatetiming.com. He's speaking to us from San Diego. Welcome back to This Week in Money.
Thank you very much, Jim. Thanks for having me.
Your November issue of the Campbell Real Estate Timing Letter is out. Where can our listeners subscribe to get a copy?
They can go to my website, realestatetiming.com, and sign up. Yeah, I just published it on November 15th, and I have to say that it was especially proud of that issue for a variety of reasons, just where we are in the cycle, and what I know after publishing for 24 years, that you learn more and more, and all of a sudden you come up with new conclusions and new ways of arguing and proving your point to people with new kinds of information that nobody else talks about. That's pretty cool.
Based on your book, Timing the Real Estate Market, where are we now?
We are at we are teetering on the edge of what will turn out to be a very significant downturn in home prices.
What's the latest on real estate across the U.S.?
It's still gradually slowly increasing on a nationwide basis. I think most of the home price indexes show that nationally, on a national basis, home prices in the U.S. are going up between 1 and 1.5% per year, which, as far as annual growth is concerned, hit a 13-year low. So in other words, prices are still going up slightly, but that's why we're teetering on the edge. I mean, this very, very low growth is ready to turn negative, and it could turn negative at any time. And more interestingly, and it's not like that it's not like all homes are going up. About 60% of the homes in the United States are still slightly appreciating. I mean, some more than others. I mean, some areas are still appreciating at 10% a year, but there's other homes that are going down in value, and they're not going down by 1% or 2. They're going down by 8 or 9% a year. So unlike the last real estate downturn we had in the United States that started in 2006, all homes start going down, almost at the same time. This time it's different. The homes that appreciated the most since the start of the pandemic in 2020, that they're the ones that are going down, and the homes that are still affordable, the lower priced homes that didn't go up as much, they're still going up in value. Places like Chicago. Chicago is one of the fastest appreciating housing markets in the United States, if you can imagine that. I mean, Chicago? I mean, gee, does Chicago have any problems? Yeah, I can think of quite a few problems Chicago has. I mean, where it would be not the most desirable area to live, specifically with respect to crime. I mean, my wife's from Chicago, so I know about Chicago. But nevertheless, Chicago is still going up in value more than most U.S. cities because it's affordable. It's the most affordable. And other areas like in Milwaukee and Michigan, Detroit's kicking ass. Now, as far as price appreciation. Now, if you ask the average American, what's the top place on your list that you'd like to live? Would it be Detroit? I don't think so. I think it might be rather low. But nevertheless, Detroit is so affordable that it's still going up in value. That's really interesting.
What's the latest on California real estate?
California real estate is still holding its own, with the exception of San Francisco. San Francisco is down 8% from its mid-2022 peak, but other areas like San Diego's still doing well. And interestingly, San Francisco is the worst performing major market in California, and the best performing major market is 50 miles south of San Francisco in Silicon Valley. Silicon Valley homes are still going up at a very strong clip, and the median price home in Silicon Valley right now is $2 million. $2 million. Why is that? Because the people in Silicon Valley have a lot of money. That's probably the most concentrated area of wealth in the United States. I can't imagine anything where there's a higher concentration of wealth. So if the entry-level home is going to cost you $2 million, you could probably get a fixer for 1.5, overlooking the freeway, the 405 freeway up there. But everything else you can probably expect to pay, for a decent home, at least $2 million. So save your money, guys.
The Federal Reserve is lowering rates and printing money. Is this direction likely to continue, and what could it mean for real estate and the stock markets?
That is such a good question, and that, I think, is the most important event that has occurred in the last year. The Federal Reserve Board has cut interest rates 2 times, short-term interest rates, Fed fund interest rates 2 times. And just in the last 30 days, they reversed course. That after the pandemic, they took quantitative easing actions where they injected $6 to $7 trillion worth of newly printed money into the economy to save it from collapse because of the pandemic. With all the businesses shutting down, nobody could go anywhere, yada, 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 all that stuff. So they printed up money to save the country from collapse. Okay? That resulted in inflation hitting almost 9%, and also U.S. housing prices during the period from 2020 to 2025 went up on average more than 50%, average more than 10% a year. That's huge. So now where we're at, where housing is completely unaffordable, all but about 10 to 15% of all Americans. But now, and inflation has come down from 8 or 9 down to 3, and the Fed's mandate is 2%. The Fed has two mandates for those of you who don't know. That's to maintain high levels of employment and keep it and fight inflation. Well, their target for inflation is 2%. 2%. It's 3% right now. So why are they? So they've just abandoned fighting inflation with quantitative tightening, which is a activity where they go into the open market and buy and sell bonds into the open market, and into quantitative easing, where they're going to start buying bonds to lower interest rates. So now, they've completely done a 180. And you say, hey, with inflation at 3%, that's still well above the Fed's target. Why are they doing that? And the reason they're doing that is that this unemployment is creeping up, and the labor market is much weaker than most people believe, and the Fed knows that. So now they've got to start fighting unemployment. So, and by doing that, they're going to be going into the open market and buying bonds, printing money to buy bonds, to create a higher demand for bonds, and when there's a higher demand for long-term bonds, that means that bond prices go up, and when bond prices go up, interest rates will go down, and try to stimulate the lower borrowing costs to stimulate the economy, and maybe most importantly, to lower the debt servicing costs of the U.S. government that currently stand at $1.23 trillion a year from the $38 trillion with the deficit that national debt that they're financing. So in other words, we're getting ourselves into a real hole here fast based on debt and debt alone. So now the Fed is panicking and kind of saying, "Screw, we can live with 3% inflation, I guess, but we got to stop. We can't allow unemployment to keep gaining momentum, because that means the economy is going to go down, the stock market's going to go down, real estate values are going to go down, and the government's going to have to do even greater deficit spending in order to keep the wheel on the car and service the debt. So we got to get financing debt costs down so that the debt service won't go from $1.2 trillion a year to $1.5 trillion a year in the next year or two, and that's the reason. And it all goes to show you guys. I mean, you can't use this as a timing mechanism. How long can this go on? This can go on for longer than most people think, until people finally come to the conclusion that the U.S. dollar, it really isn't worth anything. It's backed by nothing. I don't care if they're paying you 5% a year. The real inflation is more than that, and the only way they can pay that, they can pay interest on that, is by printing more money. And so pretty soon, when they lose confidence in the U.S. debt has any kind of investment value whatsoever, they might say, I don't want 5% on my money. I'll buy that debt at, let's say, 10% on my money. Okay, 10% on my money. That's the only way you're going to get people to buy it. So if you pay 10% on your money, that means debt financing goes up that much more. National debt servicing is going to go from 1.2 to probably 2.2 trillion, and you find yourself into a hole that you just keep digging deeper and deeper and deeper. And my background is economics, guys. I have a degree in economics from UCLA. Not that was I learned about economics at UCLA, but I got a degree in economics from UCLA. You can't keep spending more money than you make and get away with it. You can't do it, and that's where the U.S. is finding itself right now. Right now, we're running a $2 to $3 trillion deficit per year, and these are supposedly good economic times. Those are the deficits we were running during the pandemic, because the business was collapsing. Business isn't collapsing anymore. Stock market's at all-time highs. Real estate's at all-time highs. Gold's at all-time highs. that things are at all-time highs. So why are we still running that deficit? Because that's what it takes that's what's supporting the U.S. economy. It's the fact that the government is spending money that they don't have, which is pushing artificial demand into the economy. And if they tried to stop that deficit spending, the U.S. economy would do a 180 reversal and start spiraling lower faster than you can imagine. So this is, just from a supply and demand economic standpoint, the U.S., and there's other countries in the world too. Europe, for example, that they may be even in worse shape than we are. That they all have debt to GDP ratios over 100%, which historically means one thing, that the whole thing's going to fall apart at some point. That people don't get out of that jam, and so that's kind of where we find ourselves now.
Ahead, could we see inflation in some areas and deflation in others?
Well, in housing prices, yes. Yes. I mean, like I said, some areas, like let's say in the South, Florida is the worst performing state as far as house appreciation in the United States. Housing prices are down, maybe in certain areas 5 or 10% below their peak. Texas housing prices are down. Austin, Texas, I think that was a big recipient of the pandemic. In this work from home move, so many people moved from California, high-paying jobs in California, to Austin, Texas, and so they could work at home and still keep their jobs. Well, and it pushed housing prices, maybe one of the most out-of-sight areas in the United States. Now they're collapsing the fastest. So, and other areas, like I say, like Chicago. Did anybody move to Chicago because they thought that was a great place to work at home? No, they didn't. So why is it still going up? Because you can still afford to buy a house. So it's a mixed situation right now. But eventually, when the whole thing, catches up with itself, when there's still a shortage, the market is still driven by a shortage of homes for sale. Even though there's a super lack of demand, there's even a greater shortage of homes. But that's creeping higher too. And as soon as that gets above 6 months supply, then the real fun's going to start to the downside.
How is the U.S. economy doing?
Well, I think GDP last quarter was at 3%. 3%. So if you look at, is 3% good? Yeah, that's really good. So why are they lower? Why the worry? Why do we need to lower interest rates with the GDP at 3%? Because if you pulled deficit spending out of the U.S. economy, would the GDP be plus 3%? No, it'd probably be minus 3%. So that's what's supporting the U.S. economy, guys. The U.S. government is spending more money than it takes in, at the tune of $2 to $3 trillion a year. So it's creating that kind of demand. That's what's supporting the U.S. economy. And of course, that has its own ills, its own consequences, like I just mentioned. So the national debt's going up at about $1 trillion every 100 days. And the more the national debt goes up, the more the debt servicing is. And so you're in a downward spiral. And there's no way out other than to just keep spending, and hope for a miracle.
The U.S. government said about 120,000 jobs were created last month. Did that really happen?
Probably not. I mean, I am really suspicious of all data that's produced by the U.S. government, especially inflation data. According to the government statistics, inflation's at 3%. Okay, for those of us that live in the real world, it's at least double, maybe triple. So that's the real world. And jobs, you know what? I have no confidence in that information at all. I will tell you this, guys, and here's another really, really important point. In the last 3 years, the stock market has continued to make record highs. During those last 3 years, the U.S. confidence, the Michigan Confidence Index hit its second lowest point in history. So what's the moral of that story? The U.S. stock market isn't the economy. So while the average citizen in the United States is super worried about what's going to happen, the stock market continues to make record highs. But the confidence index is way down. And I'm certain that, if anybody in the Federal Reserve, has a brain, that they're looking at that going, holy shit, we got to stop this. For whatever reason, the average American is really scared about what's going to happen. Either it's his job, either it's inflation, or whatever it is. We have to stop that. We got to try to lower interest rates, try to lower inflation, which it's not going to do. So that was a panic move. Just rotating at a moment's notice from QT into QE. I mean, there was no pause whatsoever. They quit QE and immediately rolled right into quantitative easing. So they know that there's a problem building.
How are property taxes calculated in California versus other states?
That, of course, property taxes vary from state to state, but in California, even though we have the highest housing prices in the United States, one of the advantages of living here is that when you buy a house, let's say you buy a house for $1 million, the original property tax will be 1.15% of what you paid for the house. So you pay $1 million for the house. Your annual property tax will be $10,150 per year. So let's say that in every following year, let's say next year your house goes up 10% in value. Your property value isn't going to go up in 10% in value because there's something called Proposition 13 that's been on the books for decades and decades that says the maximum a homeowner's property tax can go up is 2% a year. So multiply that $10,150 by 2%. 2%. What is that? 2%? It's like 200. Let's just say it's $200. So your property tax can only go up $200 versus the person that bought that home, at a higher price, the property taxes would be significantly higher. Now that's California. And it varies from state to state. I know certain states, like I think it's Hawaii, maybe New Jersey, that they mark your properties, they mark the value of your property to the market every year, and that's what they use for determining your property tax. So that's why if your property, let's say you're in Hawaii and you buy a house for $1 million. 5 years later, it's worth $2 million. Your property taxes are going to double from what they were. When you first bought the home. In California, to the contrary, if your home went from $1 million to $2 million, 5 years later, your property taxes can only increase at 2% a year compounded, which will turn out to be like 12%. So is 12% cheaper than 100%? Yeah, a lot cheaper. So that's the benefit. And I think it's the same idea in places like New Jersey and quite a few other places, but I don't keep track of that because that's not my area of interest.
When it comes to real estate, is the buy and hold strategy always profitable?
Contrary to popular opinion, the answer is absolutely not. Now, prior to 1971, when the U.S. went off the gold standard, the buy and hold strategy could be a profitable strategy. But since we went off the gold standard, the U.S. housing market, along with other markets, has become extremely more volatile. And and especially in areas like high-priced areas like California, that I know everybody that the National Association of Realtors and the California Association of Realtors likes to tell you, the best time to buy a home was yesterday. Total BS. Total BS. For example, especially when you look at housing values when they're adjusted for inflation, even using the underestimated government values. For example, if you bought a home in 2006, at the peak of the housing bubble, during the last cycle, 2006, in California, and held it for 20 years to today, 20 years later, based on the purchasing power of the equity in your home, is still 5% lower than it was in 2006, and that's using artificially low inflation numbers. 5% less. There's a lot of other places it's the same thing. So in other words, when we went off the gold standard and they can just print money, as much money as they can, without any consequences of governments, of anybody taking their dollars and converting it into gold, saying we'd rather have gold than U.S. dollars. The markets have become extremely more volatile, and that if you're not good at knowing the best times to buy and best times to sell, you're not going to get ahead in this world. It's just a plain fact. Because especially in California, that has such volatile markets, the housing market on a median price basis from 2006 to 2012 in California fell 55%. 55%. And on just a nominal basis, based on the housing prices that are reported, not adjusted for inflation, it took 14 years to get back to break even, to get your money back. Is that a good buy and hold strategy? That's a terrible buy and hold strategy. And if you adjust for inflation, we're still not back to break even. So in other words, you got to be smarter than your average bear nowadays if you want to get ahead in this world, at least with respect to real estate. You just can't buy at any time and sell at any time and just count your profits. Ain't gonna happen. So that's forced people into a situation where they got to be, smart on the basis of finance and economics. And most people aren't smart from the basis of finance and economics. They're just, average U.S. citizens trying to live their life, raise their family, create a better life for themselves, and hopefully retire at age 65 and not have to worry about too much. That's not the case anymore. Nope. The Federal Reserve and deficit spending has changed all that. So now you got to be smart, guys. I mean, people can dance and pretend all they want and go, oh yeah, well, it's cash flow and all that. You know what? It just, if you look at the statistics, it just doesn't work. In the United States, something like 65% of all Americans own a house. So you would think that those 65% of the people that own a house, and most of them have owned a house for a long time, I think half of those people have owned a house free and clear. So you would think that, gee, those people have to be doing fairly well, right? No, they're not doing fairly well. The only people in the United States that are still doing relatively well are the top 10%. Everybody else, in some manner or form, is struggling to get by. Maybe the people that own a house free and clear, or maybe that don't have a mortgage, are doing better than others, but they're still struggling to get by. The bottom 50%, 50% of all the poorest Americans in the United States have a net worth of zero. Zero. So, and I don't look at that I look at that like a challenge. Okay, can I do anything about that? About changing that? No. Can I change my own fortune by doing certain things, by trying to run my life, correctly, buy and sell real estate correctly, create value correctly, do other things correctly with my money so that I'm not in the bottom 50%? Yeah. There's lots of things I can do. And I've done those things. And so, but does the average American have the ability or the drive or the brains to do that? No, they don't. So they just hope that they can live their life like normal human beings, bless their hearts, and everything will turn out fine. You know what? It doesn't work out that way anymore. So today, guys, you got to be on your toes, ready for anything. You have to avoid bad housing markets. You have to avoid buying at the top. You have to try to buy near the bottom. And if you do certain things, just even simple things, that you can do really, really well in life. But you have to be conscious of those opportunities. They have to be planned. They just can't happen by accident. The average American's investment strategy for real estate is they buy it when they have the money, and they sell it when they need the money. Could anything be worse than that? Not much, but that's the way it works. So I have great empathy, for what's going on in this country. My dad was a Marine in World War II, fought in Okinawa, came back, became a builder in the 50s, 60s, and 70s, and he was just a hard-working guy, no college education, and he made a good living for our family. really good living. I mean, were we rich? No. Were we better than the average family? Yeah, we were. And it was because of my dad's hard work. My dad didn't go to my baseball games. My mom went to them. My dad was always working. So, and he did that, but he could do that. Can people do that nowadays? Nope, can't do it. One thing you can't, it's almost impossible. You need so much capital to start building houses that the average guy can't do that. So there's a lot of obstacles today, financial obstacles that prevent people from doing like what my dad did after he got back from World War II. So now you got to be smarter. So when I grew up, by the time I was 30 years old, I grew up in a beach town in Encinitas. I owned 13 investment properties by the time I was 30 years old. 13. Was I rich? Nope. I owned 5 of them by myself, and I owned 8 of them with other partners. And so 13. Today, a guy 30 years old can't even afford one of them. Things are so expensive. So if I was going to make my fortune in real estate today, would I do it in Southern California? No, I would leave. I would go to some low-priced area, Detroit. I don't care where it was. I mean, just to build up my bankroll, make myself, $500,000, then maybe move back to Southern California and try to have enough capital to start doing my thing here in Southern California. But you can't start on the shoestring like I did, in the 1960s. You can't do it. 13 properties. People go, what? And they go, yeah, the properties I was buying for $25,000 back in the late 2060s now cost over $1 million. So how do you get started? You don't. You got to move away. And most people don't like to move away from Southern California, from family and friends and the weather. So they just live in the basement and, and smoke pot and play video games and get unhealthy. So, I know. So, I wish I could change all that, but I try to advise kids the best I can what to do. And, kid, I have an annual gym membership. One young kid just graduated from Penn State, and he said, Mr. Campbell, if you were me and wanted to make money, what would you do? And I said, I'd become a politician. He looked at me and laughed, and I said, you'll be a millionaire in no time flat. And he started laughing. But there's a lot of truth to that. Legitimately making a good living nowadays for somebody just starting out, especially in Southern California, is extremely hard. Extremely hard. So, you just got to overcome those obstacles, guys, and do what you have to do. If you have to move away to make money, do it. All those kind of things. Because, that money has never impressed me, with anybody. But you need money to live a comfortable life, right? You need it. So, I'm not the richest guy in the world, but I'm sure as hell not the poorest. And we live a comfortable life here in Southern California, but it's because we started early, and we kept living in houses that appreciated in value. Now we don't have a mortgage. At my age, no mortgage. The kids are all gone away. We don't have any debt. And, we can almost do whatever we want to do, as long as it's within reason. But you got to approach life differently today than you had to, when I was a kid.
And will the Fed's new quantitative easing action save the U.S. housing market from a crash?
No, it won't. No, it will not, because even though it's going to lower interest rates, housing is still so unaffordable that, let's say they lower mortgage rates, back from, just a little bit below 6% down to 5 or 4%. That is going to make such a small difference in the monthly mortgage payment relative to the price of the house. It's not going to make any difference at all. Like if you look in California, for example, during the 1990 market, the housing values peaked in 1990, and they hit bottom in 1996. During that 6-year period, what did mortgage rates do? They fell by 2 percentage points. So did they revive housing? No. Maybe they slowed the downturn a little bit, but did they revive them and make prices start appreciating again? No, they did not. So when housing prices peaked in 2006 in California, and they bottomed in 2012. 6 years later, mortgage rates fell by 3 percentage points. And housing prices in California, median price fell by over 50%. Did that turn things around, those lower rates? Nope. Because it's all based on affordability, guys. If you can't afford a house, you can't afford a house. And when it gets that extreme, and especially with inflation today eating people alive, which is why the confidence in the American economy is the second lowest it's ever been, lower interest rates are not going to revive the housing market. It's just going to have to play out. We're just going to have to watch the normal completion of the cycle, which is down. And at some point, it'll reach a point where housing will start recovering, and then we'll be in the beginning phases of a new cycle. That starts with recovery, expansion, peak prices, then decline. It repeats over and over and over again since time began. Nothing's new there.
What is brain in neutral, and what are the benefits of it?
Okay, now we're talking about stuff that's really dear to my heart. Guys, for those of you that have listened to me before, you know that health has always been my most important investment. Always. And recently, I've been reading a book called The Comfort Crisis. And what it's about is why Americans are so screwed up, especially mentally today, because of the times. And what this book proposes, and it's something that I've been doing for the last 2 years without knowing exactly why I achieve the benefits of it, is that people are addicted to their cell phones, they're addicted to computer screens, they're addicted to TV, and what that does, it distracts themselves from the things that are most important in the world, which is their physical and mental health. That the studies are, just starting, but they point to the fact that the more time people spend looking at their cell phone, the more likely they are to have mental illness. And it's totally believable. I see that. And anyway, here's what the study showed. Is that, let me tell you what I've done first. At least twice a week, I take 1.5 hour walks in canyons that are near my house. Canyon trails. Not on sidewalks, all dirt. I'm out in the middle of canyons where there are no sounds other than an occasional rattle from a rattlesnake or maybe a howl from a coyote. I can see some houses off in the distance, but I'm walking up and down hills at a very rapid pace, primarily for my physical conditioning. Okay, what I've learned during those last couple of years is my ability to think clearly, to come up with new ideas, goes up by 1,000% when I'm taking those walks. And I never understood why. And I said, I'd come home and I'd tell my wife, you know what, I just came up with a great idea today. And I said, because of this, when I'm on those walks. And it's because when you're out there in the middle of a canyon with no distractions, no people, no cell phone, no traffic, no honking horns, your brain goes in neutral. And it needs that break. And when your mind's in neutral, you can think about whatever you want to think about. There's no outside stimulation. And you can prove it to yourself, guys. Do what I've been doing. I don't know if you live in the middle of St. Louis, obviously, that's going to be probably more difficult to do than I am. Here in Southern California, we have canyons everywhere, so it's easy to retreat to a canyon and just spend time there. But it's unbelievable how beneficial that is to your thinking, how that changes your life. Since 1913, depression is up 33% in the United States. 33%. And that's because people, all they do is they spend all day looking at their cell phone, looking at their computer screen. Hey, I have 2 beagles that I take for 2.5 hour walks every single day. I just got back from one today before I started this interview. Everybody walking on the street that doesn't have dogs, whether they do or don't have a dog, 2/3 of the people are looking at a cell phone. They can't even enjoy their friggin' dogs being out there and letting their mind go free. Everybody's looking down at a cell phone. You got to get away from that, guys. You have to get away from that if you want to improve your mental and physical health. And just do it for yourself. In Japan, it's in Tokyo, for example, it's very, very dense living. People live in these 20-story buildings and these little 500-square-foot flats. It's a very, low-cost form of living, and there's no privacy at all. The Japanese government has had the brains to develop inside these inner cities, to develop these 10-acre sites. That is nothing but the trees, no buildings or anything, and people often go in there for 20 to 30 minutes a day, 2 to 3 times a week, and they see that. Ask them how that's changed their life, and the change is unbelievable. It's unbelievable how much they say, I have a better life. Think more clearly. I feel better about things. I'm not as stressed out as I used to be. So you got to get away from the stress, guys. You got to get away from it. Go to a canyon. Go to some woods. Chuck your cell phone. Chuck your dogs. Don't even take your wife. Just you out there with nothing but, the bears, the coyotes, whatever the case may be. And you'll be amazed how your life's going to change. It gives you energy. You can think clearly. All of a sudden, you can plan your life, more clearly and accurately and more confidently. I was at there's a really nice high school where I live, and it's I was over walking in the school with my 2 dogs because they like the baseball field. And during baseball season, I saw a baseball player in his uniform leaning up against a wall, looking at his cell phone. And he's in really good shape, nice-looking guy, baseball player, athlete. And all of a sudden, right next to him was a gorgeous girl, could have been a cheerleader, about 5 feet away, looking at her cell phone. And I said, hey, excuse me, guys. I said, can I make a suggestion to you guys? And they looked at me and said, yeah, sure. And I said, you two, what I suggest you two do is chuck your cell phones, get on an airplane to Waikiki Beach, go down to the sand with a thermos full of Mai Tais, and watch the magic begin. And they both look at me and go, that sounds like something that would really be fun. It is. Just get away. Go someplace. Get rid of that friggin' cell phone that you have. And because people live on these cell phones, and it's causing brain damage. It's you know what? Your mind is so overstimulated from bullshit that you can't think about really good things, clear things, new things that can improve your life. And so I'm living proof that, I've been doing that. I didn't know why I was doing that. I just knew the result. I go, whoa, I can hardly wait to go and make that by myself, because waiting the new idea I come back with. And once you come back with a new idea, and I just came back, the other day with a new idea, immediately write it down, guys. Immediately. Don't think, oh, gee, maybe I'll get around to writing that down, so maybe I'll do it. Write it down as soon as you get home. And if you even act on, 20% of those ideas, I guarantee your life's going to improve. You're going to get healthier mentally. The physical aspects are there, because when you walk, I'm walking approximately 6 miles at a very fast pace. That keeps my weight down. I mean, that's how you keep your weight down. Is aerobic exercise. You can lift weights all day long, and all you're going to do is get strong and big. I mean, is that going to keep your weight down if you're my age? No, it's not. You got to walk. So that's my health hint for this month, guys. And I hope some of you take me up on it.
Where can people follow you, buy your book, Timing the Real Estate Market, and subscribe to get your latest newsletter?
They can go to realestatetiming.com. That's my website, just like it sounds, realestatetiming.com. And some of you might want to sign up for my blog. I do a blog post about once every 2 weeks, not every hour like they do on social media, and I talk about real estate conditions. I talk about whatever I want to talk about. But lately I'm starting to talk about more and more about health. So if you're interested in health, I'm probably a really good guy to follow, because I'm probably the healthiest 78-year-old guy that you'll ever meet in your life. You know, people ask me, where do you get your energy? I said, I'm healthy. I mean, I'm healthy mentally, I'm healthy physically, and that excites you. That says, wow, I don't live in despair. I live in excitement that almost I can't wait to see what tomorrow brings, because I know it's going to bring something great. And you have to be healthy mentally and physically to do that. So just get rid of your cell phones, you guys. Stop social media. I've never been on social media. Never. There's no interest in me ever doing that. I don't need that crap coming into my brain. Just go out into a natural area where there's silence and let your brain operate. You'd be surprised the thoughts that'll come to you.
Robert, thank you so much for being on This Week in Money.
You're welcome.
My guest has been Robert Campbell, publisher of the Campbell Real Estate Timing Letter, his website, realestatetiming.com. He was speaking to us from San Diego. Coming up, Dallas Brodie, next on This Week in Money.
Always consult your investment professional before making any investment decision. This Week in Money is archived online at talkdigitalnetwork.com. Welcome back. My guest is Dallas Brodie, a founder of OneBC, along with Tara Armstrong. She's on X at Dallas_Brodie, where a commentator left this interesting note. If Margaret Thatcher and Chuck Norris had a daughter, her website is onebc.ca. That's the number onebc.ca. Dallas, welcome to This Week in Money.
Thank you very much, Jim. Nice to talk with you this morning.
And full disclosure here, I didn't know it until we started talking just before the interview. Dallas is a former student of mine at BCIT, where I was teaching media law.
That's true. It's amazing. That was 30 years ago or so. And I think to myself, back then I was taking a break from law and I had gone back to school. I was 36 and I thought I want to try something different, and I went to BCIT and thought I might be able to use my legal skills on the air. And you taught a really good course there in media and the law.
Well, the whole idea was don't get charged with contempt and don't get sued for slander or libel.
Yeah.
Dallas, can you tell us about OneBC and how it came to be?
OneBC is a brand new party in British Columbia that was kicked off about 4 months ago now. And I was expelled from the Conservative Party of British Columbia last March for making a post on X about the Kamloops supposed mass grave of 215 children. And it came to my attention back then as a result of, I was the Attorney General critic then, and there was a lawyer at the Law Society who decided to sue the Law Society for defamation because he had pointed out that the mandatory course materials at the Law Society contained inaccuracies about the Kamloops gravesite. So that's how that happened, and the leader, John Rustad, had asked me to take that down. Then I participated in a Zoom call. I made further comments that made my situation even worse in the eyes of John, and I was expelled from the Conservative Party. And then after that, I sat as an independent with two other people who left the Conservatives at the same time, with Jordan Keeley and Tara Armstrong. And after working together for a while, we realized we need to form a party that is going to carry forth the principles that the original Conservative Party was supposed to do. And Jordan decided to stay as an independent, but Tara and I need two people to form a party. And we formed a terrific team. We got a chief of staff and an executive director and some other strategic people, and we got busy, formed a party, and here we are, OneBC.
OneBC has made a documentary called Making a Killing. Can you tell us about it and where our listeners can watch it?
Yes. First of all, it's makingakilling.ca. Makingakilling.ca. It's going to premiere on December 1st. And we are having a large private viewing here at the legislature on December 1st. And then after that, it's going to be widely available on, it'll be put out on my X account. It'll be on YouTube. If it gets pulled off YouTube, we'll move to Rumble. But it will be out there and being pushed out all over the place. It's approximately, I think it's 75 minutes long. And this documentary is called Making a Killing, Reconciliation, Genocide, and Plunder in Canada. And the story in some ways tracks my journey as into this whole issue because I had not been well informed. I knew something about the Indigenous issues in British Columbia, but I know a lot more now. And so it's a story about how this came to be a story for me. And we go around the province and interview different people about what is actually going on with what we call the reconciliation industry in this province. And it is really a documentary that's a foil to all of the information we're constantly assailed about the importance of reconciliation and how it's supposed to help Indigenous people and all of the hopeful and happy talk we have about this. And really what's going on behind the scenes is really not helping Indigenous people. It's actually helping what we call the reconciliation industry, which is a very powerful group comprised of, as one commentator calls the neo-tribal elite, the chiefs and councils around the province, lawyers, lots of law firms making very big money, accounting firms, the big accounting firms, small accounting firms, lots of money there too, consultants and developers. And this is billions and billions of dollars we're talking about. We're not talking about small amounts of money. And it digs into the foundation of all of this truth and reconciliation movement, which started after the announcement of a mass genocide at the Kamloops Indian Residential School. The Kamloops Indian Residential School was the largest of all the residential schools in Canada, I believe. And anyway, there was a claim made in May of 2021 that the bodies of 215 children had been found in a mass grave. And 5 days after that, we were a National Truth and Reconciliation Day. A holiday was established. The flag of Canada was flown at half-mast for 5 months. We all remember the pictures of Justin Trudeau kneeling down with a teddy bear on the grass. And the federal government passed UNDRIP, the UN Declaration on the Rights of Indigenous Peoples, as law in Canada. And the BC government embedded DRIPA into our laws here. So here we are. And so this explores the impact of all of this on British Columbia and what it's all meant.
Did they find any actual bodies there?
No, there have been 0 bodies found.
Can you tell us about the Hoax Busters tour to Kamloops?
Yes. Okay, so you're talking about our trip up to the Thompson Rivers University last week?
Yeah, what happened? Yeah.
So last week, 2 of the preeminent people in Canada, 2 scholars or academics. One is a former high school teacher named Jim McMurtry and a former professor from Mount Royal University, Francis Widdowson, asked me to go with them up to Thompson's River University to engage students in a discussion about this. And of course, Thompson's River University is located in Kamloops, which is the heart of this whole story. I, of course, wanted to go and support them. Both of these people, Francis and Jim, were very unfairly were fired from their jobs and for speaking truth about the history of the residential schools and so on in Canada. But it's come to be that you're only allowed to say certain things, and if you go against the established narrative now, you will be literally marched out of your school, which is what happened to both these people. Their lives were destroyed. They lost their living. Their their dedication to their careers. They were not political people. They were true teachers, loved their students, loved their work, and their lives were just destroyed. So it was an honor to go with Jim and Frances up there. And basically, we went right onto the campus. Frances had been issued a notice that said if she comes, she will be issued with a trespass notice and she will be removed from the campus. So we got there. A person came out from the university, and there was protesters who were ready for us, and then there were a bunch of students hanging around to see what was going to happen, and lots of media there. And Frances was issued a trespass notice at the beginning. She said, "I'm not leaving. I'm staying." And they said, "Then we will call the RCMP." She said, "Okay." And basically, she said, "It's a public place. I'm going to stay, and I'm going to talk to the students." And so we stood there, and Tara was there too. And we basically engaged students out in the cold that day I think it went on for about 3 hours. It was incredible. And I don't know if you'd like a description of what went on there. There's been a lot online about what happened. It was actually really exciting, because for all the people who were protesting and screaming and trying to drown us out with loud noises and booing us, there was a very not a small number of people around the outskirts really listening, wanting to hear. So there was curiosity, and that is excellent, that we can open topics and there are people who want to listen, even though there are activists who want to drown out any contrary messaging.
Is the Indian Act helping those people it was designed to help?
No, the Indian Act is not helping Indigenous people at all. Like, the Indian Act is probably the reason that we see our fellow citizens who are Indigenous living on reserve not having good lives, living in crummy situations and not seeming to progress with the rest. We OneBC, we have a policy about what we would do if we formed government. And one of the things is we would demand the repeal of the Indian Act. You know, Jean Chrétien and Pierre Elliott Trudeau in 1969 introduced a white paper that said we cannot continue with the Indian Act. It is divisive. We are creating two classes of citizens in this country. It is not going to work. And these are guys who I don't even politically align with, Pierre Elliott Trudeau and Jean Chrétien, but they were right. But you know what? When they tried to introduce that white paper, who protested the abolishment of the Indian Act? The Assembly of First Nations. Now, the Assembly of First Nations is the leadership group of all the bands across Canada. There are approximately 635 bands in Canada. And so that assembly is the chief from each band. So 635 chiefs, and then they have the top chief. And they said, no way, you're not getting rid of the Indian Act. So my view is that would have been the best way forward for Canada. And that was a massive mistake. And the results of that mistake we've now been feeling since 1970. And here we are 50 years later with an absolute mess.
We've heard that BC has a uniparty. Does BC have one, and what is it?
I would say, now that I've been here, I now understand what a uniparty is. The uniparty is what you get when for example, right now the governing party is the NDP, and then the official opposition is the Conservative Party of British Columbia. I thought we were going to come over here and be this fierce opposition with principles that would really go after things that are going wrong in our province. But once I got here, and I was new to politics, I learned the ropes. You don't make waves. You basically are controlled in the questions you ask, and you do not tackle any of the really, really hot potato issues. You just stick to the very middle zone. And the NDP expects you to do that, and the other party knows that they're going to do that, and they talk to each other. they're not really oppositional, and there's an agreement. I believe, I mean, I wasn't in the meetings with the leaders, but I could tell just by the dynamics that we were being shut down from raising any of the very important issues that British Columbians are talking about. And that's what I call, that's the uniparty. No one is really going after the sacred cows and the hot potatoes that need to be discussed. And why don't they do that? Well, because it's politically risky. And people get over here and they just want to get reelected. You know, in British Columbia, for example, in order to get your pension, you have to do 2 terms. And then after you've done 2 terms, you get a pension that's the equivalent of, I believe it's 75% of the highest rate you were making at the time you finished. So that's a really nice pension. And, you know, a lot of people in politics, this is the best job they've ever had. So they're pretty happy. And that is not my situation. I don't even, and so when I came here, I was shocked to see how this happens. And I had a steep learning curve there.
Rumors are an international organization's directives were responsible for the ostrich slaughter.
Well, international organizations and the ostrich farm, I'm not, that is not my super area of focus, so I can't go into the details of that. But what I can tell you about the ostrich situation, I went up to Edgewood and I visited up there and I saw what was going on. And I'll tell you, it was really, I was shocked to see the level of what I would have to call almost a military presence there. It was, I did a broadcast from up there. I was so upset one day, I just went off and I said, this is obscene. We have 400 flightless birds who have not been sick for over 275 days, and we have more cops here than I've ever seen in my life. You know, downtown Vancouver is just awash in drug addicts, drug dealers, people assaulting people, and up here, all these police are up here guarding ostriches. And it really felt heavy-handed, and extremely calculated to roll out slowly. I don't believe in conspiracies. I don't, because being my legal background, I know that to run a conspiracy, that's very hard to keep everybody quiet. But what I felt here was that there was definitely an intention. They were going to wipe out this ostrich farm. And what they did was they just slow played it, and bit by bit, they got their people in place up there, and they delayed the hearings for the stays and everything. They started setting up the kill pen with the hay bales and the opaque coverings so you couldn't see things, starting to segregate off some of the ostriches. Then the fencing went up around the fencing that already existed around the ostrich corral, this big blue fence, and RCMP putting yellow tape all around. Honestly, you would have thought there were 400 Paul Bernardos in there. It was sick. And the cruelty to the family, and Katie Pasitny, the woman who owned the farm, these were her animals. They had names for all of them. And she wasn't even allowed to go in and see her own animals anymore. I mean, that's really cruel. And there were animals getting injured. It was terrible from just a humane standpoint, watching the sadness, and you could see the birds were wondering why, like they knew they're humans. And so it was terrible. It would be like having all your dogs in there and you weren't allowed to see them anymore. And then of course, one little bit by little bit, they set up more and more. One day, a convoy of 18 police cars rolled in. Like, come on. And, you know, the police, you went anywhere near the yellow ribbon, back up, please. You know, geez, really? These are such peaceful people. And if those birds were sick, what bothered me the most is if the birds were sick, I know that Katie, such a responsible woman, she would have participated in the humane euthanization of her own birds. it seemed that there was something much more to this. And I kept saying, why don't you just do a test? Instead of turning this into a kill site, why don't you use this as a laboratory? Apparently there's, and I'm not well versed in this part either, but apparently these birds might have had the answers to some strains of bird virus or flus. And they could have been very valuable because the herd had survived the avian flu, apparently. And they had lost some initially, but they got their immunities. And because they weren't answering questions directly, when people won't answer questions, my radar goes up. There's something going on here. I can't tell you what it was, Jim, but something was going on, and something that they didn't want to answer or deal with or face head on. And the decision was already made way before. They were just slowly rolling it out. And then that horrible night when they killed them, what can I say?
It looks like there could be cross-Canada protests on Saturday, November 22nd against a number of things triggered by the ostrich slaughter. Are you getting any feedback on that people have had enough?
I do know about this. I think it's called the Farmers Slow Roll. Mm-hmm. And they're going to be starting up in the interior, I think maybe even in Hope. And they're going to be rolling down right into Kitsilano in Vancouver. And I do get emails about that. I got a lot of feedback when I did when I spoke online about it up there. People were very upset about this, but I'm not deeply receiving all of the emails right now on that issue. But I think it's going to be a big protest, and I think a lot of people are feeling like this is reminding them about the time during the mandates, and that's why they're very concerned, because it feels like a one-size-fits-all answer to things, and government overreach or authoritarianism, and this is what's concerning a lot of Canadians.
Land title uncertainty under the David Eby NDP government. We're hearing there's a huge problem that it's causing investment to steer clear of BC with concerns of economic destruction. What are you hearing about this?
Yes, the Cowichan decision has been like a bomb going off in people's lives in terms of their understanding of private property rights in this province. I've seen for 20 years, watching the case law develop, that it was going to come to this, and there have already been examples of private property being given away in Haida and way up near Dawson Creek and so on, and it was only a matter of time before it hit, the Lower Mainland and highly populated areas, and here we are. It's now happened, and this judgment the judge even said in her ruling, it's hard to know what's left of a fee simple title in the face of this. And this is where we're at. The fee simple titles are being declared defective and invalid. And the lawyer for the Cowichan Reserve was quoted as saying that people who want to sell their properties there will now have to seek approval from the Cowichan band. And then there's been Mayor Brodie, no relation, but same Scottish clan. We've connected that. But he held a town hall he's the mayor of Richmond. He delivered letters to all the private property owners affected by this ruling, because none of them had even been given notice of this trial, which spanned more than 10 years. They woke up to find that they have a defective title to their property. And so there was a very big event held out in Richmond, and people were talking about how they're very concerned. And one man said he's been told by his mortgage company that they won't renew his mortgage. And there's also a major business out there called Montrose Properties, which is the largest landholder in the area that was awarded to the Cowichan, saying they want the trial reopened, which is an interesting concept. And then there's a specialist in property assessments named Paul Sullivan. He's well known in the Lower Mainland for doing a really good job on, appealing property assessments. people appeal their property assessment sometimes because they feel like their property taxes are too high and the assessment is inaccurate. So there is an appeal process. He's launched a class action appeal on behalf of the property owners. And you see there's a knock-on effect to this, because now if the value of a property is determined by your ability to sell it. Right? That's how value is determined in a free market. So if no one wants to buy your property now, what does that mean? Well, it means your property is worth zero. If nobody wants to buy it, then it's not worth anything. And assessments, in a large part, are based on the fair market value of your property. So you can see where this is going. They're saying our property taxes have to drop down to almost zero because the property is not worth anything. And by the way, all these years that you've been arguing in court that I don't have title, maybe why was I paying property taxes all these years? And so it's having an impact that, well, there's so much to this story, and then there's the fact that none of the property owners were notified of the case over these 10 years. It's the longest case in Canadian history, is my understanding, over 500 days of trial. And there were 2 applications made to inform the private property owners, and the judge denied both applications. And the other thing that impacted this trial was that the federal government lawyers were in this case, and so were the provincial lawyers, and the attorneys general for both the federal government, who was Jody Wilson-Raybould at the time, and federally, and David Eby was the attorney general provincially. They made written directives to their lawyers that in all Aboriginal title claim cases from that time forward, the argument of extinguishment was no longer allowed to be advanced. Now, why is that important? Well, extinguishment was the strongest argument against the Cowichan's claim over private properties. And what does extinguishment mean? It was a principle of law that said once the British established when British Columbia was founded, we established the land title system, which was based on the Torrens system. And we had the land title office. All of us have seen the beautiful drawings and the surveys and so on that go into the land title office. Once you owned that fee simple title that you owned extinguished all other claims that had ever been on that land, including Aboriginal title. So to say that extinguishment was no longer an argument you could make, which meant that you basically opened up private property for attack. And indeed, that's what's happened. Now, the city of Richmond did make that argument. They were unsuccessful on that, but the two of the biggest litigants, the provincial government and the federal government, did not argue extinguishment. And in my view, that's such a dereliction of the duty of the government of British Columbia to defend its citizens and private property rights in this province. I am absolutely in shock that this happened.
Hand-counted paper ballots allow for provable just elections, with mail-in ballots kept to a minimum for special situations. Enter computer technology and widespread mail-in ballots, creating the perception of election fraud. This perception needs to be corrected by returning to hand-counted paper ballots with only small exceptions, so that everyone in BC knows their vote counts in provincial and municipal elections. What can be done to make sure our elections are fair?
Well, for a long time, my whole life, I think everybody thought elections were fair. When did people start thinking that elections weren't fair? When machines entered the scene and when mail-in ballots entered the scene. This is where this is so open for abuse. So OneBC is saying we will immediately, when we form government, because I believe we're going to, we are going to immediately restore in-person voting, paper ballots. You do not have cross-boundary voting. You go and vote in your own riding. Because right now, they also introduced a new thing that you can vote say you live in my riding of Vancouver-Kloshena, usually if you lived in that riding, you had to go to this specific spot in your riding to vote, and you got notice of which community center or church or building to go to do that. And then you'd go in and your name would be on a list, they'd cross it off, and then you'd go and do your vote. They did another thing, they allowed, okay, I live in Vancouver-Kloshena, but I can go all the way over to Strathcona if I happen to be there that day and vote. But it's just that, and they weren't checking ID. There were so many things. So we want identification. You'd have to show. And that can also be just a letter. We used to allow that. Remember, a BC Hydro bill that's been delivered to your address that you can show. And then they cross-check it on the list that they have there, right? So, and then you vote in person in a paper ballot. And then you have the old way that we used to do it, which worked very, very well, was to have the tables there, the elections BC people, but then scrutineers from each party who would watch. I mean, I was a scrutineer when I was young just for fun to see how it worked. And it was fun. You'd count the box at the end of the day, and it wasn't hard. It was done quickly, and it was totally fair. And there were no boxes being taken home at night or all this stuff we're hearing about. Oh, yeah, we took a box home or we took a machine home and kept it in my garage overnight. I mean, that's just not okay. I mean, even if the people were honest, they didn't do anything, people need to perceive that everything was done fairly so they can trust the judicial system. So we would return to that and no more mail-in voting. I mean, I actually think advanced voting days are okay. That's okay. Some people are going to be away. Advanced voting days, and maybe some really special circumstances where someone cannot get out of their house or something like that. I think there's a way to make room for that. But yeah, we need to return to the basics. We're not even a big population here. We're 5.8 million people. Come on now. There are other countries, they count the whole thing in a day, and we're sitting here saying, oh, it's much faster to have machines. No, we don't need machines. And then at some of the polls this year, the machines weren't working. Like so silly. Oh, so let's get away with the machines.
Yeah, the machines are also hackable.
Yes, they're hackable. Yes. And why do we need them? Why? There's no reason. There's no reason. And I think most people listening to this would say, yeah, I totally agree. Unless your goal is to scam the system somehow. And, you know, if I won an election, I would like it to be fair and square. I won fair and square. This is the vote. It's guaranteed. This is what happened. This was the result. We don't want any funny business anymore.
You can find all this information on the internet. This is from the Brave.com AI search. Canada signed on to UNDRIP, the United Nations Declaration on the Rights of Indigenous Peoples Act in 2021. In November of 2019, BC enshrined UNDRIP with DRIPA, the Declaration on the Rights of Indigenous People Act, into provincial law. The UN 2030 Agenda for Sustainable Development and UNDRIP are interconnected frameworks guiding reconciliation and sustainable development in Canada, particularly in BC. Adopted in 2015, remember this date, in 2019, the WEF and the UN signed a strategic partnership framework to strengthen collaboration in areas such as climate change, digital cooperation, gender equality, and financing the 2030 Agenda. David Eby, the Premier of BC, has been associated with World Economic Forum through its Young Global Leaders program, which he completed in 2015. He served a member of the WEF's Global Futures Council on Cities and Urbanization. From 2016 to 2018, he's been listed on the WEF website as a contributor and a member of the Global Leadership Fellows Program. There are allegations that an advisor to Premier Eby is linked to the Canada Committee 100 Society, a group identified as a Communist Party of China front organization. Now, a side note to this, former BC Premiers John Horgan, rest in peace, Christy Clark, have their own pages on the World Economic Forum website, weforum.org. What's going on here? Is BC just an arm of the World Economic Forum?
Well, you've just educated me on a lot. I mean, that's quite a history. I can tell you right now that I have never been to any of those places. I have no idea even what those organizations are. I mean, I know what the WEF is and so on, but I have never been invited to any of those junkets. and I would never go to one. If our politicians are being influenced by administrators in Davos and other places around the world, then they need to declare that and get out of British Columbia politics. We need people who are running BC who are here for British Columbians. We have problems right here in BC that need answers that are generated by British Columbians. We know this province. People in Switzerland don't understand our province. Like, I cannot believe, I don't know, well, I can only believe that if they've gone to these organizations that they're being influenced by the policies there, and they've made friends and they've made commitments, because that's how these things run. You go places, you get influenced by friends. My view is that I would never participate in that. And I wouldn't want anybody working on my team who is affiliated with that. And I would also say we need these influences to the degree they've crept into our political dialogue and the decisions being made. They need to be, get the hell out of here. I don't want these people governing British Columbia, and we need to find answers here in BC for ourselves. We are an incredibly industrious province, what we used to be, and we need to rediscover our own ability to work our way out of our problems. And we have a lot of problems, but we cannot allow people around the world to be telling us what to do here. This really worries me, that we are not in control of our own destiny anymore. And we're seeing it in municipal councils. I see it even in Vancouver, where I live, that policies are being brought into our city that I never heard anybody asking for. Our cities are being changed. Suddenly there are barriers going up around our city. Streets are being changed suddenly out of nowhere. No one's asked for it. And nobody seems answerable for it. It's just done. And there's a guy at City Hall who just makes the decisions. We're shutting this road. We're blocking this street. We're putting in a plaza here. We're changing the bridge. We're putting in bike lanes also here. We're narrowing these streets. It's like, who asked for any of this? Nobody. Our city was functioning very well. Thank you very much. But, I'm a person who believes that local communities understand their community and care about their community more than anybody else. And I think that we need to get back to that. And I don't like this creep into our system of all of these people who go around the world and come back with ideas that have been generated by, I don't know who these people are. I don't think that's okay. I think a lot of people agree with me on that too.
The World Economic Forum slogan, "You'll own nothing and be happy," seems to be going full speed ahead in BC. Do you think the goal is economic destruction, destitution, and death for British Columbians?
It's funny, I used that expression the other day in question period, "You'll own nothing and be happy." And whether this is a purposeful effort to ruin our economy, I can't say, because as I already said to you, I don't believe there are evil people saying, let's destroy Canada. But I do believe we are watching a kind of managed decline of what we all used to believe was our country. And our economy is flailing now. We are not doing well. Our health system is crashing and burning. Everybody knows it. Anybody who's been sick knows the treatments you get aren't helpful. There aren't enough doctors. I used to tell people when I first got here, every file is on fire over here. Nothing's working. And whether that was on purpose or just smart, good people not getting into politics and doing the hard work involved, and it just allowed unserious people to get into government who are just all about ideology and thinking grand dreams. That's not how things run. And so we've slipped into this very dangerous situation. British Columbia does not have capital coming in right now, and we have capital leaving, and we have a net outward migration of 73,000 people last year from this province. That's a first in history. Net outward migration. And that is not a healthy sign. And our economy is really suffering due to the inability to attract industry here now, due to the strangling environmental consultations and Indigenous consultations that go on year after year, extorting money out of businesses in order for them to set up shop here. We all need to start working together, Indigenous, non-Indigenous. We have to work together. And by the way, none of these policies are actually helping the average Indigenous person. And I know that because we have two people in our documentary, Aboriginal men, very brave men, who have come on, and they will be in the documentary, and they say straight goods, this isn't helping any of us.
Is OneBC getting any coverage from the mainstream media?
Well, not a lot. We get a lot of coverage from alternative media and from social media people. That's very powerful there. I will give Keith Baldry, I got to say, the guy who I thought would like me the most, has actually been, I think, very honest about saying the impact we're having. I've been shocked that, Vaughn Palmer will barely speak our name. I don't even know if he said our name. There have been some journalists, mainly they come after me when they think that I'm in the hot seat and they want to, and somebody's calling me names again. But I just, that's okay. I'll speak to anybody when they come and speak to me. And also they can call me whatever names they want. That seems to be what they do when they want to not discuss the actual political issue you're raising. Another thing I've learned. If you don't want to discuss the matter, just call somebody a name.
What do you think it'll take to wake people up before they get destroyed?
Well, I think the Cowichan decision has been a very big wake-up call. And then let's add to the Cowichan decision the recent announcement of the Kamloops band claiming all of the city of Kamloops and Sun Peaks. Okay? And now we've got, and across the country now, there's another land claim that's been launched in Quebec, one in Ontario, or maybe two in Quebec now, one in Ontario. So even back east, they're going to start feeling the pinch of this. So we are, I think, waking up now. And the good part about OneBC is I think we're allowing people to realize that there is a party here in Victoria taking the slings and arrows and raising the issues that are on people's minds. And they know that we are principled, we are honest, and we have a policy at our party too. If we make a mistake, we get something wrong, we will immediately accept it, acknowledge it, and apologize, and then move on. But we will not engage in cover-ups or any kind of that thing. We are principled, strong, and very focused. And we are all extremely concerned about the future of this incredible province.
Digital ID is being pushed, with some calling it the mark of the beast, under World Health Organization directive signed onto by Canada. If people refuse vaccines, their digital ID will cut off their access to everything. What are OneBC's thoughts on digital ID?
We don't have an official policy on digital ID. That may be rolled out later, but I would say from my standpoint is I don't think that a lot of people want to have digital ID, and I don't think we're ready for it. And I think we need to ask our citizens in British Columbia, is this something you want? If you don't want it, we will block it. And we will not allow it to come into our province. We will invoke whatever we need to, the notwithstanding clause or whatever, but I don't think people want all their information on digital, because I think people think that the next step is they're going to take away cash and everything you spend will be digitized and they'll know everything about you and there will be no such thing as privacy left. And people say, oh, why do you need privacy if you're not doing anything wrong? Well, I think a lot of people like their privacy, frankly, very much, and they're not doing anything wrong. They just want their privacy. That's your right as a free person, to have your privacy, and the government shouldn't be breathing down your back. Jim, we need to get the government out of people's lives. We need to let people run their lives. They know how to do it better than the government does. And so we are hopeful that we can restore people's belief that we can return to a time when you can run your life and the government just helps you and doesn't try and force you or control you. So those are some of the hopeful thoughts I have, and I actually really believe we can get back to that. And that's why I'm here.
At some point, could the best option to be just get out of BC?
Well, I know that we are having a lot of people leave BC, but I'm asking people to stay and fight. Stay and fight for this incredible province. We can recreate the days of old where we had a thriving multi based economy with forestry and canneries and fishing and mining and more manufacturing. We used to have manufacturing. We can do that again. And so stay and fight. I'm going to stay and fight for as long as I can. I don't know how long I'll still be in office, but I will fight as hard as I can during the time I have. And I'm going to ask British Columbians to join us. And let's start fighting back instead of just giving up. Because leaving just means we've given up on this province. And a lot of us, I mean, I've been here, my family's been here for 5 generations, and I've heard other people writing to me saying they're 8-generation families here, and they love it here, and they're feeling so sad and losing hope. I don't want people to lose hope. I want everyone to have hope for the future, like everyone, and not just small groups, everybody.
Dallas, before I know you have to run here, so how can people get more information from you, and how can they find out more about OneBC?
Best thing to do is just go to our website, onebc.ca, numeral 1bc.ca, and read our policies, see what they think. We've taken some time. There will be more policies rolling out, but we've got the basics of what we truly believe in there. And if people want to become a member or sign up for our email list, I would strongly encourage they do. It's not expensive. Become a member of our party. And perhaps if you want to be a candidate, you can also, there's a space there for saying that you would like to get involved. And we need lots of help. And I'm happy to go almost anywhere around the province to do town halls. So if you have a group of people and you want to put something together, reach out and we'll get that organized.
Dallas, thank you so much for being on This Week in Money.
Okay, thank you, Jim, and thank you to your audience. And all I can say is don't give up hope. We're going to win. We're going to get so tired of winning. Winning.
My guest has been Dallas Brodie, one of the founders of OneBC. And that wraps up our show for this week. We'd like to thank our guests, Ross Clark, Rick Ackerman, Robert Campbell, and Dallas Brodie. And thank you for listening. If you have any questions for the show or for our guests, you can send them to info@housestreet.com. I'm Jim Goddard. We'll be back next week with more This Week in Money.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at talkdigitalnetwork.com. This Week in Money is a production of House Street Media Incorporated. Executive producer is Tom Allen.